Boom! Welcome everyone to this live intraday strategy webinar. Today is Wednesday, May 25th. Michael Boutros here with you this morning. Great to see you. Rick says, "Hear you fine." Cheers. Mark, Nazia, Pete, Pooja. Good to see everyone here in the room. So let's jump right into price action. We're seeing dollar index continuing to hold this range just below that trendline resistance, dating back to the highs that we made in April, of last year. So we don't have any major data upcoming today. Tomorrow you get durable goods. Friday you get the second revision on first quarter GDP. Later this morning you do get the BOC, which will be on tap. Not really anything specific in the BOC we'll be looking for, the Bank of Canada rate decision, guys. I guess we'll be looking to see if there's any concerns or remarks with regards to inflation. I would expect them to be a little bit more of a cautious tone, specifically ahead of the quarterly meeting, obviously for the Fed next month. So it's going to be interesting to see how that pans out. Again, not really expecting anything major. Nonetheless, dollar CAD is at a very interesting level. We'll take a look at that ahead of the rate decision. That's at 10 o'clock, by the way. Adam, good morning. Great to see you. Francis, same to you, my friend. Eileen, always a pleasure. We'll want to go over the Euro setup from yesterday, the Aussie setup. Really interesting price action, Aussie testing resistance. Gold has been continuing to move through those targets. We're now testing the March and April low day closes. So we'll review that. SPX. We'll touch on dollar yen and the sterling crosses. And as always, guys, if you have any specific pairs or setups you want to review, do feel free to throw them out on the message board. So before we move on to the Euro setup from last night, again, a quick look. Nothing really to talk about here on the dollar index daily. The 30-minute chart does have us still within the confines of this formation here that we were looking at last week. Again, risk is for a pull to the downside below 11,989. That's still the level that we'll continue to be sort of focusing on here near term for the dollar index. On its face, so far, ahead of the event risk ahead for the next couple of days, you're simply looking at a very basic weekly opening range. Weekly opening range high, weekly opening range low. All right. As we noted yesterday, the longer these ranges hold, the more times they are tested, the more significant, the more aggressive the breakout will tend to be. Okay, let's jump right into the Euro. Here's what we look like at the daily chart. And if you guys remember, we've been following this one for a while now too, and the weekly opening range was setting up just above this 38.2 retracement off the low. That was 111.95. On the near-term chart, you also had a nice confluence there of 100% extension off the high that took you into 111.87. And you were setting up the week right above support. The downside break of this key support, and you're looking for a move towards the region that we just hit right now, which is the 100-day moving average, 1162. We talked about that yesterday. Next level down is right here, and sort of an area of which I would expect to see a little bit more support. You have the lower median line parallel for the current operative formation that we're in off the highs, and that converges dead on with the 200-day moving average. Okay, I know we went over this yesterday, guys, but it's still no change to any of the levels, no change to the outlook. The ideal scenario would sort of be a dip into this region. Okay, I know Jamie's looking a little bit higher as far as support. I think he's looking at 110.60, 110.70. We're looking at 110.45, 110.65. What's 10 pips between friends, right? So in any event, depending on where we are in time, Francis says, are you on? I can't hear anything. Guys, can I just get confirmation that the audio is working? Mario says it's good. Okay, thanks, Mario. Okay, thanks for that, guys. Pooja, Nazia, thank you. So I'm still looking lower. The bullish or the bearish, excuse me, invalidation level is what former support was. That same exact level at 111.87, 111.95. As long as we stay below that, or let me take that back. This is the breach we need to invalidate the immediate downside bias. Okay, so as long as we stay below that, you have to keep looking lower in price. Again, there's that confluence just lower, and then the 110.65 level also converges on some basic trendline support here, just lower. All right, I would expect to possibly see this thing still stretch into another low, guys, right around that region. Just, again, going back to basics, right? Always trying to simplify everything. Going back to just a basic weekly opening range. Here's your weekly open. You press a high, test a low, fail to test a high, break through the lows, come back, test it as resistance. You'd expect to close or make a low late in the week, meaning a Thursday, Friday stretch. So heading into tomorrow's trade session would sort of jive pretty well to see another low in price here before we start to move on a rebound play. So fits well with the narrative of the break of the weekly opening range on a stretch lower. Long story short. Any questions on the euro? All right, Francis is with us again? Okay, cool, Francis. Glad that you had that resolved. So basically, long story short, just watch this formation, guys. We've been in it for almost 3 weeks at this point. And it's continued to guide price pretty well. So the lower median line parallel is what converges on that key support region that we were looking at on the daily chart right here. My notes I have tracking for support around 111, 110.65, 45. We talked about that, and resistance at 111.87.95. We talked about that. Okay. Euro. If there are no other questions on euro, we will move right along. Next one up is the Aussie dollar. Another one of which I love to get involved in. Aussie looks pretty good here, guys. I readjusted the slope. Now, we haven't changed any of the horizontal levels, but a rework of the slope here, and I think this is the slope also that Jamie's looking at. We were working with a slightly different slope. This is the slope high that we were working with previously on the daily chart. And in fact, this is the high by a couple of pips from the October high. But interestingly enough, the parallels have acted really well. Obviously, the high that we caught in April was sort of the main technical feature you're looking at. But whatever you're looking at the end of the day, that lower median line parallel is just lower from where we are now. And on the near-term chart, whoops, just snap these levels for you. On the near-term chart, that lower median line parallel is pretty darn close to the operative one that we've been working under the assumption of the last few weeks. Okay, again, a formation of which you don't have too much conviction on, except the pivot that we made right along the median line. Okay, that's sort of the only main thing that's the saving grace for that. So as we said last night, initial resistance, you're looking right up at that former 618 retracement on the way down. That's 72.11. You're checking that as resistance right now, and that's what's needed to invalidate the immediate downside bias. So if you were on the long side play here last night, you're probably looking to take a little bit off here. You're at resistance. If we get the breakout, I'd be looking for targets at 72.53. I'd be looking for the yearly open at 72.81. And this is sort of the play that would give us a little bit more conviction that we've made a more significant low and there might be a more meaningful advance up ahead. Okay, but we've been in this formation for quite some time. You're checking the upper bounds of it right now. In fact, if you guys remember during yesterday's webinar, we talked about the divergence that we made right into that low. That ended up being the low. Literally during the webinar is actually when this thing bottomed and kind of made a nice rally. You have another opportunity to get in after the U.S. close on the move lower here. At this point, heading into the U.S. session, the pressure is on a break above that swing high you made overnight. Here's what the daily chart looks like at this point as well. All right, so looking for that Aussie break. Keep in mind, like I said yesterday, the weekly open, I had it in here too, what is it? Is 17. So 72.11 is the 618. 72.17, which is actually almost the exact high, is actually what the weekly open was. Okay, so 72.11 is that 618. 72.17, which is the exact high, ended up being, or is rather, the weekly open and the near-term bearish invalidation level. If this thing breaks lower, and we see a little bit, or we see the dollar just rip from here, it's very, very hard to imagine that, but let's just say for argument's sake it did, and you see a break beyond this confluence of slope lines, there's really nothing on tap until down into 70.64. I think I do have, yeah, I mean the soft target at 71.40, that hasn't changed from last week, but you're really looking for a drop into 70.64 if we make new lows on Aussie dollar. All right. No other questions on the Aus. There's really no data out of Australia as well, so watch the dollar for price action guidance here. Again, durable goods tomorrow and GDP release on Friday. One other thing I just wanted to highlight. Is the momentum trigger. Looks like it gave out. It's an ugly, ugly break, and these are not breaks that are like going to be operative that I'm going to act on. You want to see a little bit more of a conviction turn than that, but watch the close today. Watch the close today. All right, so those are both the major setups I've kind of been watching on the dollar crosses, specifically heading into the event risk for the US dollar into the close of the week. Those are sort of the highlighted dollar setups I'd like, specifically from where we are now. If the dollar weakens, Aussie I think has a little bit more of a delayed upside approach from sterling. So does the euro, right? I think the euro has a little bit that low to make near 110.65 would be beautiful if we can get it, and then a little bit of a recovery play on that front as well. Also take a look at just basic trendline resistance off the April highs. If you mirror that to sort of the low that you made here on the 9th, I just wanted to point out it's pretty darn close and the exact low we made yesterday. So something to pay attention to. Nothing I'll like stress too much, but worth noting. Worth noting. Okay. Jumping into the radar charts from last night, we had gold, SPX, and Euro Pound. I want to start with Euro Pound real quick just to show you. This is a beautiful, let me take this back one sec. What time would you consider the close today? 4:30? No. So the close of the candle on the platform comes in at 5, Rick, but market close at 4. U.S. trade markets close at 4, or the equity markets close at 4. But the candle closed at 5. Going into the radar charts, you're more than welcome. Going to the radar charts from yesterday, just want to touch base on gold real quick. I mean, or Euro Pound first. This is such a clean setup. I didn't include the scalp chart because the levels are exactly the same, but there's a lot going in here. And again, I'm sure Jamie's going to review this with you guys during the midweek strategy webinar, a little bit more of a longer-term swing approach. But just to put things in perspective, really clean ML formation that we've been following for months and months and months. This break here that we made specifically this month on the 18th did a lot, okay? Not only did it clear, this median line formation here off the lows, but this also broke the objective monthly opening range, clearing the way for downside. And it also broke a head and shoulders formation, okay? Which would give you a measured move down into somewhere in the 74 region, 73, 75. Here's what the extension would look like. So on a conservative approach, if you take the measured move of the head and shoulders formation that you're looking at here, shoulder, head, shoulder, That would give you a drop or a target range at 73.75. Well, just above that, you have a ton of things to look at. A, the 618 retracement of the entire advance off the July lows. That comes in at 73.83. And finally, last but not least, you have the May high day close, the June high, and the October open, all from last year, stacked up into 73.86. You can't make this stuff up, guys. So with all that confluence down there, that becomes the hard, rock solid sort of key support. Ahead of that, though, you do have some support targets that I'd be looking for a possible near-term rebound. A, 75.64. That'll complete 2 equal legs down. That would scream correction, which would suggest that you find a little bit more of an important low here and rebound higher. Below that, and a little bit more of a critical zone, in my humble opinion, 75.23. Okay, the 50%, retracement of that entire advance. You have the lower median line parallel for the multi-month formation we've been following. And you have the 200-day moving average, which is going to be sneaking right into that same exact range over the next few days. So this thing is like poised, I think, for a little bit more of a monumental drop into this key region right here. If 75.20 gives out, you got another, 200 plus pip range to the downside before you run into anything too severe in the way of support. So the reason I don't typically scalp this setup, guys, too aggressively or usually in general is just because it's a very tight range as far as pips are concerned. Keep in mind they are sterling pips, so obviously nominal amount or nominal value is going to be higher. But nonetheless, from a trading standpoint, it makes putting your stops and limits a little bit more trickier, right? You don't have that forgiveness or that cushion you would have typically on a normal trade. In such a scenario, you can open it up, take a third of the daily opening range. There's been some setups that have taken a half of the daily opening range, or the daily average true range, rather. So, you're not held by a standard, guys, of you obviously want to always be trading a rule-based approach, but on something like this, it's a slow-burning trade. You're not going to want to get in and out intraday. This is sort of something you want to approach from more of a swing type of play. Long story short, 75.64, 75.23, looking for near-term support on euro pound. And again, would match really well with our picture of the euro, our picture of the pound, independently versus the dollar. Euro looking for a deeper stretch into 110.65, looking for euro pound to stretch lower. From the sterling side of things, let's take a quick segue before we jump into the commodities. Here's what the pound looks like. Also have a setup highlighted here that we've been following as well. For some time. Let's just go to the good old archive section right here. So the levels haven't really changed as far as the daily chart's concerned, right? We were looking to stay constructive while above that 144 handle. That ended up actually being the day of the low. This was the near-term bearish invalidation level at the monthly open. We just cleared that and closed well above it yesterday. Here we are looking for a rally towards the yearly open. 2016 open comes in at 147.30. Here's what it looks like on the 30-minute chart. So let me go back to that real quick. A couple things you want to know. A, first of all, you got a decent resistance trigger and momentum. B, at this point, we can go ahead and sort of clear this out and keep the focus on the broader key structure that we're following. 30-minute. Again, I wanted to do this with you guys here on the webinar. Same deal. Really nice structure that we were following off of last week's highs. We were looking for that topside break early in the week. You got it. Kind of clean up that chart. We'll get rid of that. Descending slope kept us constructive. Yesterday when we were talking about this with a break above this region, this is the bearish invalidation level or the bullish invalidation level. We'll go ahead and move that to the lower median line parallel of this formation. And we'll go ahead and clear this one out. All right, so a quick little on-the-fly update for you there. And again, that 2016 Open, 147.30, 147.31 converges very nicely on that upper median line parallel heading into the U.S. session later this afternoon. Bullish inval still 145.33. Look to buy pullbacks well above that region. Still looks pretty good. I wouldn't get too aggressive until we close above the yearly open. Obviously, you saw what happened the last time we tried to break above the yearly open. It was on, obviously, the 3rd of the month. A huge outside day reversal, massive outside day reversal, right off the highs after tagging that median line. So you're sort of testing a close above this again here. If you do make that close, keep in mind, just real quick, 147.81 soft target is a 200-day moving average. Hasn't necessarily been a major game player over the last couple of, I guess, over the last year or so, but you have seen some decent inflection. So just keep that in mind. That comes in at 47.81. But I do like continued long side exposure for the British pound. So with the picture that we're seeing here, again, the euro setup, the pound setup, really puts that euro pound trade in a very, very comfortable positioning, looking for those downside targets into what is that, 75.22. 200 days at 75.15. Any questions on euro pound? I like to call this the grandpa trade because the ATR is always rather tight, but levels look clean. Okay, let's jump over into the dollar yen, and then I want to cross over into the sterling yen setups that we've been following as well. So let me get rid of this. Sterling yen, or dollar yen rather, looks like this. Daily chart has us right back up at that same, let me snap these levels for you. There we go. So if you guys remember, last week we were talking about dollar yen, and there was a lot of interest in the yen rally, and we were coming up on this lower median line parallel formation. Do you guys remember this conversation? And we were talking about, look, I'm not really sure what's going on in this thing. All I know is that there's resistance here. If you bring this into a 30-minute chart, which I'll show you in a moment, clear resistance from even a Fibonacci level. And the breakthrough really shifted the focus to the downside. Now, what you're seeing happen early this week is the pullback coming back, checking that same slope as support and rebounding higher. What you're also seeing is a resistance trigger, break above resistance, check it as support, and move off. Right? Giving us the validation to continue favoring the upside. Here's what the 30-minute looks like. Okay, there's that key support, that fib support we were talking about, a 1618 off the low, a 618 off the high. Here's the week open. You saw that drop into basic trendline support. Caught that. We talked about this yesterday in the webinar. And now we're checking the weekly open and the weekly opening range high. Very, very simple trade, okay? The best part of it is that you broke that resistance, you tested as support, you tested a drift below it, couldn't hold, nice reaction off it, and you're basically just testing the opening range high for the week, right here. If this breaks, your validation to continue favoring the long scalp is there, and you're basically looking for continuation into that 111 target. Not so much crazy about this being the 2618. Again, the focus on that level is really the lows that you made here in February and the median line structure that, although you've had some pretty outrageous breaks to the downside and up, the slope has continued to call these pivots for months, and that converges just higher into 111. So, though it's not my favorite trade, if the technicals are there, the technicals are there, and it looks like a pretty basic setup for me right now. And specifically, the reaction you're seeing along that slope is pretty encouraging, at least at first. Any questions on dollar yen? The reason I stress this dollar yen chart, the reason I bring this up is just to give you a quick picture of sterling yen. So dollar yen on the way up is weakness for the yen. Sterling is already strong. Should be seeing sterling yen move higher as well. And in fact, it has been. So I highlighted this chart on Daily FX yesterday. If the 30-minute now has a couple of different levels that I've added on, I want to kind of just show you real quick. But the basic premise that I want you to be looking for near term is these topside three targets. You're basically looking at 162 where we are right now, which is the confluence of the upper median line parallel. This is operative. We've been in this since the November highs. Okay. And the median line off the lows. And this is just a mirror slope of the support. Okay, so do you remember earlier in the month we were talking about this and using this slope, right? Either way, whether you use the adjusted slope for the low or whether you're working with the slope off of the low in price, a couple of things that we want to keep in mind is the potential for a breakout to give us a much more substantiated run to the upside here. And specifically for the levels on, sorry guys, give me one sec. And specifically here for the levels on sterling yen, you have the low day close, or the, excuse me, let me take that back. That February 20, or the February 11th, 2016 close, which turned out to be the reversal day close, which turned out to be pretty darn close to the highs that you made for April. That comes in at 162.68. Okay, and then you have the actual stretch low for January, and that comes in right here at 163.96. So some pretty nice levels to the upside here, where you're likely to find some more resistance. And those levels in and of themselves, those highs in and of themselves, is not just why it's important. It's also important because if you take a longer look back, this formation, which also held price rather nice, has a couple of sliding parallels and lower parallels that might offer resistance and converge right on both those marks. Okay, so again, these bottoming processes aren't going to be quick and ferocious. Sometimes they take some more time. So wouldn't be too surprised to see a stretch into one of these levels, a pull back lower. If you're looking for the swing side of approach, you'd want to look for that pullback to find support near the 50 line to get back on the longs. From the scalping standpoint, we're kind of on hold looking for a turn at one of these resistance targets near term. Keep in mind, much larger range ATR, a daily ATR here is giving you 216 pips. So you're well above 40, 53, 54 pips per scalp on a setup like this here in sterling yen. Here's what it looks like on the 30. Oh, there she goes. 62.20 and counting. So watch 62 is a soft target, is that 88.6. It's just basically the highs. But you're looking for that 163.86, 163.50. Next targeted zone for resistance. All right. Let's jump into the CAD. And then we'll just touch on the SPX and gold. So obviously dollar CAD, we're heading into the BOC interest rate decision again later today. Here's what the daily chart looks like. Kind of losing some steam. Not really looking too impressive as far as a momentum standpoint. Look for the pullback, constructive above 29.85, 29.76 region, which is basically that major key resistance we talked about before clearing it last week. So heading into the BOC, the near-term targets haven't changed. Here's what the scalp chart looks like. Okay, so we did end up making that pivot again last night back to the downside, used it as resistance and moved off. Again, on its face, you're making a very basic weekly opening range heading into the interest rate decision. The immediate focus, just want to highlight this region here. Basic 236 at 130. And then 29.85 would still be the level of which you need to clear to sort of validate and move lower. Right here. Pretty much exactly where we left you yesterday, guys, as far as dollar CAD is concerned. Raise ceiling, divergence into the high, weekly opening range is still preserved. In fact, the last two tests of the weekly opening range lows have met with pretty strong rebounds. So you want to keep a focus on that. Again, for me, it's a non-play. From a trading standpoint, I'd want to see a drop into here for possible long triggers. Or a clear break back above the median line, come back tested as support, then you'd initiate a long. Ultimately, you're looking for a rally towards 33, 33.25. As far as the BOC is concerned, just to kind of put things in perspective, here's what the implied probabilities look like for the BOC heading into that release in just a few hours. So there's really no expectations that we'll see any type of move as far as interest rates are concerned. For the BOC, all the pressure is just on the language and what tone they set, essentially, for the future outlook from monetary policy. As far as the U.S. outlook is concerned, this one is one that we've been tracking. We have seen the June meeting move a little bit higher into 38%. That's the highest it's been since the release of the minutes last week. You're seeing that the July meeting is also up from yesterday, now at 56%. And this will change day to day, but I have been tracking it, and it has been tracking higher, which is kind of counterintuitive in my mind. But nonetheless, here we are. Earlier today, there was commentary on the news wires from President Bullard, or the Fed's Bullard, and James Bullard. He was talking about the fact that although July is not going to be a quarterly meeting where they have the press conference and quarterly projections from all the committee members, it's still open for them to be a meeting where they do move on interest rates. And he made it specific that there's very few expectations, they're saying, that the Fed would look to make a move like that without having a quarterly meeting where they can sit down and have the press conference and Q&A with the public. He's going right against that. In fact, it's funny he said that, and the only reason I bring it up is because we had this exact conversation here in the webinar yesterday. The fact that it's unlikely, or some people are saying it's kind of hard to see them making a big move on monetary policy like that without having a sit-down presser. So that being said, that kind of rules that out. Either way, he kind of stated the same exact stuff we've been hearing. They remain data dependent. They kind of keep playing both sides of the coin here. So we'll continue to monitor the implied probabilities. Again, I don't think, humble opinion from our side, we don't really think that we're going to see any move. I know Jamie agrees with me on this for the June meeting specifically, but we'll keep you updated if there's any major shifts in this. Also, a quick look at the relative performance. I forgot to mention this earlier in the session. You do see that the sterling's top performer, 0.44% in the session. Japanese yen, worst performer, which is why, again, I wanted just to highlight that sterling yen, sort of the same exact play that we're looking at with that sterling strength, yen weakness being a sort of decent play. I appreciate that. I think it's a little bit too boring for me. This is sort of where my gig is. All right. Gold. So I would stay steady as she goes, but she hasn't been so steady. It's been an accelerated drop over the last couple of days. I didn't even expect it to get quite this vicious, but we're in the right direction. That's all that matters. Here's what the gold setup looks like. First of all, I just want to take a sort of top-down approach. Here's what the weekly chart for gold looks like. It's going to be a little bit rougher on the levels. It's not going to be an exact approach like our intraday charts, but broadly speaking, basic trendline support. You can see that these slope lines have continued to define price rather well. There was the pivot the last time we tested this trend line. A break? Very possible. Very possible. In fact, that 1237 level is also the high day close and the high week close that we made for that June rally. So big level there. Former slope resistance or basic channel resistance now being compromised again as support and kind of leaves the downside vulnerable. Also, this week's close will be paramount from a momentum standpoint. There's a momentum trigger if we do close below that on building divergence into these highs that we've been watching for weeks. Again, would suggest that for sure we have some further downside to go before we start to look higher. The daily chart looks like this. Okay, same slope that we're looking at there. Slope off the high puts the median line in line with basic trendline support off the lows here, just lower from where we are right now, like 1214, 1215 range. Interestingly enough, that's actually the close lows for April. And the level I was looking at yesterday is right 1221, 1222. Here's what it looked like yesterday. And 1221, 1222, my friends, ends up being the April and May, the March and April low day closes. Oops, wrong chart. Right here, right along this trend line. I wrote it in the write-up here, but I didn't want to include it on the chart because I knew it was going to look pretty messy. So here's, if you take a look back, here are the levels that you're looking for. It's the exact, like literally, your low day close here in March, and then your low day close here in April. And that's what we're sitting at right now. So if you're holding short exposure, again, an area of which you'd like to chip some of that off. If you're looking for your next downside target, if we do move there, this is where I'd clean up a lot more of that position. This completes an exact 1618 extension off the high. It'd be the first time that you're testing the lower parallel of this formation. Remember, we added this a couple of weeks ago, the fact that this initial median line formation we were working with off the high, once we broke it and we tested it as support, we said, you know what, let's try adding another ML using those same reference points for the new high-low high. And the slope is identical. Okay, that adds further conviction on it. Both of those lower parallels converge right on that 1618. So either way, heading into the close today, if you do see a break lower from 1220, that would be the signal to keep that downside bias in play into 1212. Initial resistance still 1226. I would work with that basic lower parallel there as initial resistance. Bearish invalidation, former support, and certainly the level that we were looking at earlier in the week there, 1241, 1242, key region of resistance at this point. Now, if we close the U.S. session, guys, and we're still below this region, let me highlight this for you right now. That'd be your new resistance, and we would drop the bearish invalidation level from here to here. Again, that's that 1237 level that we looked at on the weekly chart. High week close. Or it's not the high week close anymore, obviously, but on the breakout rally there, the weekly close, the high day close, and that level converges right in that basic trend line. So pretty clean here for gold levels. Also, if you take that same slope we were working with off the highs, guys, this is what we saw yesterday in the webinar, take that same slope and extend it off the high from that late April rally into the 21st. Looks like we're catching those lows, or at least making some pivots off it here. Long story short, look for a low here over the next couple of days. The opening range for the week has made a clear break to the downside. You look for that late week, Thursday, Friday low. Also keep in mind that you are making some pretty radical divergence here with price action making a new low, the oscillator making a higher low. Both reference points being sub 30 is a weak signal, but a signal nonetheless. There's your resistance trigger and your first region of resistance in price. Any questions on gold? From the intraday standpoint, no change to any of those levels. Still look pretty good for a rebound, either right from where we are here or look for that dip into that 1618. Long story short, I'm looking for a rally off of that lower parallel near term. We'd be using that rally to get right back on the short side. Any questions on gold before we move off? Right on cue. Okay, last but not least, SPX. I know you guys have seen this chart before, but Spoos is looking to make a break or looking to test a break of the monthly opening range high. So earlier in the week, we talked again about that 2039, 2040 region into 2044 key region of support, just Fibonacci support, but on a closed basis has continued to hold the monthly low. The monthly opening range high was pretty well defined, tagged and rejected later in the month, and that came in right around this 2080 region or I can't see the tag below it. Right around 2080, 2082, I think it was. And the monthly opening range is pretty well set here. You came, you tested. We posted a chart on this on Sunday saying, hey, we're right here again, checking this major support. We dipped into it. It held. Weekly opening range took set just below the yearly open. The break shifted the focus right to the upside. So the question is, what do we do from here? So you're testing the monthly opening range high. I have no play here until we close above this region. Remember, right here on the way down on the 19th, that looked like a clear break of the opening range low for the week. If we would have chased that, it would have been a rude awakening heading into the start of this week. So keep in mind the risk sort of market that you're in at this point. I'd be looking for a close above that opening range high. Subsequent targets would be the high day close. This is the high day close for the year. That comes in at 2103. And then subsequent topside targets, you'd be looking for the high day close from last year. That takes you into, what, 2125? So pretty big implications here, guys, if we do push through this. Today's close is really going to be paramount. It could be an epic fail and you close lower on the day. If that's the scenario, I'd be looking for a move right back to the yearly open, which has been a pivot this entire month. Nice momentum resistance trigger. Couple of things to look at yesterday that was very encouraging with the move above the yearly open. My only apprehension right now is if you didn't take part in that break, there's nothing you want to do up here until we see a close beyond the opening range highs for the week. But uncanny how that support held for like weeks and weeks already. Pretty clean. Focus is now on the monthly OR. Just watch for that break. All right. If there are any other questions or trade setups you guys want to review, feel free to post it on the message board. That's kind of the setups that I've been following. Really quick update on crude. You're basically testing the high day close for October at this point. Today's high was 49.41. The high day close comes in at 49.49. So you're literally talking about a couple of cents off. But watch for some near-term resistance here. Next topside objective, honestly, if this breaks, is really nothing until like up here. And again, if dollar pulls back, I would expect to see that stretch. 51.01, 51.06. But you know, from a trading standpoint, not looking for any long exposure. I'm looking for exhaustion from here. Hey, Adam says, Mike, when will SB Squawk be available to me? So, guys, if you haven't yet done so, you're newer to the service, on the SB Trade Desk homepage, there's a SB Squawk sign-up form here. So just click on that, give us some basic information that helps us match up your Twitter handle with your account, and then submit a request through Twitter. A lot of people do this and forget to submit the request through Twitter, or vice versa. They'll submit the request through Twitter, but then I can't, you know, match it up with their actual subscription. So make sure you do both, guys. Just quick fill out form, and then click on our SB Squawk Twitter page and just click on follow, and that should do it. So Adam, if you submitted it last night, I'll have an intern look at it. I'm sure they'll have it set up for you ASAP, my friend. And welcome aboard. Any views on Aussie Key, says Graham? Absolutely. Frustration, but views nonetheless. Here's Aussie Key. And this thing is, I think it's really poised for like some crazy radical moves. I think we did cover this in the webinar yesterday. We talked about the slope of influence for Aussie Key, which we've been following for literally a couple of years at this point. That's off the 2014 lows. That same slope, still influencing price, extended off the October low of last year, has caught all the lows for 2016 thus far. Add to that, you're at the yearly open right here. So look, Graham, if this thing breaks from here, it's gonna be messy. In my humble opinion, if this thing breaks from here, it's gonna be messy. It's gonna run into 105.60, this region right here. Look to challenge maybe that October low will give it a little bit more trouble on the downside, but sort of would really invalidate the upside slope that we've been working with since the start of the year. And excuse me, I'm not really a big fan of all that Kiwi strength, right? On a breakdown mode, that's Kiwi strength overtaking Aussie. I think kind of intuitively for me, I'd be looking for a little bit more of a stringent support. Now, from the near term, certainly the structure that we were looking at and we highlighted on the reports last week, or earlier this week, right? Certainly this structure gave out and then got recovered real quick. So there's two ways of looking at this. Either this was a false break and this thing's going to break down like no one's business, right? In which case, look out below. My preferred sort of scenario is to actually just adjust it to the new high and look for that consolidation of this range break. Still looking for a possible upside play, right? It's encouraging that the break through the weekly open failed miserably, came back, and then again continued to hold that support. And we've continued to sort of bobble along that over the last couple of days. So heading into the latter part of the week here, you still want to see another move through the initial weekly opening range high. I'm not going to stress this trend line. I'm just doing it for graphical purposes to show you guys. But you'd basically be looking for a break of the weekly opening range high to target, subsequent topside objectives here. And I think you get it. It's really hard for me to envision all that Kiwi strength from this point. Even if Aussie does come off, and it kind of fits well with the picture that we talked about and that we presented in yesterday's update on the Aussie dollar, right? If it sees that topside breach of that descending channel formation, you'd start to see that rally become a little bit more of a decent player here in Aussie Key. Graham, does that help? I don't think we changed any of the levels, my man. I think the levels are all the same. I do like the long side. From a trading standpoint, I have no problems taking stabs at long positions against these lows whenever you can get within 22 pips. It's been rather tight, but I wouldn't start targeting anything outside the median line here unless we get a little bit more of a market change in behavior, both from momentum and price. Price, I'd love to see us break above the weekly open again. Momentum, I'd love to see resistance cleared at 60, some support start to materialize around 40. Graham says, thanks. Yeah, I think it's going to be about next Aussie move, next Aussie dollar move. It's a long drop with the Kiwi strength, right? Yeah, that's exactly what I'm thinking, Graham. With the downside target being, another 100 pips from where you are now, it's kind of hard to envision all that continued Kiwi strength. But let's see this weekly opening range finally give out. Why do you use the 764? This is Francis now. Why do you use the 764 instead of the 786? I see you use 786 other times and 764 at times. So Francis, 786 is actually the real Fibonacci level. Okay, 764 is simply 1 minus the 236 level. So I don't really want to stress the 764. However, that being said, when you're looking on an intraday level and we're looking to scalp, I always want my targets on the inside, okay? Typically on the retracements that we're looking at, between a 764 and a 786, you're looking at about 7 or 8, sometimes 10 pips. So I'd rather be on the 10 pip inside as long as it allots with my risk to reward ratio than look for the 786 stretch, okay? That being said, a lot of commodity currencies, the Aussie, sometimes dollar CAD, you'll see that they actually perform better with the 786. A lot of them, the 786 is sort of where it's at. Also the 886 retracement, which is the square root of 786. There are a lot of derivations. But for the purposes of our strategy on the near term, I typically will take the 764. Let me get that target on the inside. And I'd rather get sort of pulled out there first. I'm just trying to remember. There was a trade set up from last night where I had both of them on there lined up. Just wanted to show you the difference. Maybe it's the Aussie dollar. Good question, though. I get that a lot. Okay, can't remember what setup it is, but on some of them, I'll actually put them both back to back and I'll play that range, okay? He says, got it. I use the 786. I mean, 786 is the true fib. Don't get me wrong. If you're if you're a Fibonacci trader, that's a derivation of the key 618 ratio. 764 is not, okay? It is not. It is more just of a bisector of that range between 100 and the 618 retracement. So I'm a big fan of Fibonacci in its true historical uses and its viability as a strategy in general as an occurrence that happens everywhere in the universe. I mean, I used to give lectures on Fibonacci, guys, that we could go over forever. You see it everywhere in galaxies, in nature, in the way that branches of a tree start to extend. These ratios in the spirals of shells, all are you see derivations of the key 618 ratio and Fibonacci happening naturally occurring in the universe. It just blows your mind sometimes, but these same patterns happen in human in human reaction and in human behavior, and you can see that interpreted in price, which is why Fibonacci will always work best in markets that are super liquid and markets that are heavily traded. The more actors, the more participants, the more symbolic it is as a crowd psychology, and the more, obviously, inputs you have, the more reliable you can use these wider studies of Fibonacci and different behavioral trades. So we went off topic there a little bit, Francis, but I hope that answers your question. He says, thanks. You're more than welcome. Awesome. It's all done on my end. Thanks, Mike, says Adam. Cheers, Adam. I'll make sure that we get on that right off the bat for the SB Squawk to get you on board. Welcome aboard, my friend. Always good to see new faces here. So what was the last question on? Aussie Key. Yeah, keep that in mind. I do like the trade, and I do think you get the rally at some point. It's just this, this thing has got to find some basing here, and sometimes this takes a couple of days. It's not always going to be a quick, rebound type of play like this. Although we are at uptrend support, so you'd expect to see a little bit more of a concerted move off that level. Any other questions? Trade setups you'd like to review? The Sterling CAD setup that we talked about earlier in the week, that's heading into that 2009 and February 2015 high day close. Initial target with the break above that median line formation dating back to the August highs of last year. Look, I don't even have anything on this until like 95.36, which is why I didn't publish a new scalp chart on it. Our idea for this was to look for the playback to try to get entry along this median line, but we didn't get it, okay? So at this point, if it holds and closes above that, median line resistance, former median line resistance, which should now offer some support, there's really nothing until 95.30 or so. The 50 line converges on that 50% retracement later in the week, but this is pretty big here for me. Don't want to go chasing it just yet. I do want to note the divergence that you're seeing in momentum and a basic slope line, okay? If you took basic channel resistance and extended off the low that you made there in late March, you could see support, support, resistance, resistance, checking it right now. So another CAD weakness would be the play here on the upside, but sterling strength sort of coming some near-term risk, but broader focus remains to the upside above 91.27 on this one. Adam says, it's a pleasure. A while ago, I listened to a webinar from Jamie and immediately knew that he knew what he was talking about. I've just been away, so couldn't commit to joining. I'm so glad I joined and look forward to be a part of an awesome group. Thanks for the awesome session, Michael. Hey, you're more than welcome, Adam. And again, that's part of the hallmark of it, guys. I think you guys know, and retail traders are starting to pick up on the voices they should be listening to, and I'm glad and we're humbled that you chose to be here with us. Adam, we're going to try to do our best to keep you on the right side of the market, man, and it's great to have you on board. Eileen says, amazing the sterling pair is all behaving. No throwovers yet for the most part. Adam, love the enthusiasm, man. You're in the right place, brother. Cheers. I would agree, right? Although I wouldn't say it's been clean on all of them, Eileen. If you take a look at the sterling scalp from earlier in the week, you got a false break here that kind of faked me out at first, and a quick throw over and a quick reversal. So that's a small throw over there. This is a small throw over of the ascending structure here. So it could come into the highs and break lower. Wouldn't count your eggs just yet, but it has been remarkably clear, right? And the bigger thing is across the sterling crosses, which is even better. Sterling yen looking pretty good. Like I said, sterling CAD, the breakout looks material here. You just need to see the close to sort of validate it. Look for some exhaustion on the pullback to give you the opportunity to get long. Don't start chasing these, but they are looking more and more appealing as time goes on. Certainly the dollar index, as ugly as it is, it still needs to give way. It still needs to give way. This thing just continues to grind higher and higher. So look for that weekly opening range Again, durable goods durable goods tomorrow. We'll cover that in the webinar and give you a quick update as that gets released in the AM. Quick reminder, Jamie will be on with the midweek strategy webinar at 1 p.m. Eastern later this afternoon, so don't miss that. I do have some appointments, so there might be a little bit of a delay in today's update, guys. I'll give you an update on the radar charts if anything is warranted. Other than that, we will speak tomorrow morning. Best of luck trading. We'll see you then. Cheers.